Alright, I'm at thinkadvisor.com. This article is about volatility and VIX. Coast Rich, expect more volatility in 2015. Before I get into this article, I just want to disclose that as of right now, I'm shorting the XIV, a VIX or VIX ETN. And what that's doing is that I'm betting when I'm shorting that ETF, the XIV, I'm betting that volatility is going to go higher. I have played around with that ETF long and short the past month. So anyways, let's look into the article. Let's go to over here. Expect more episodes of volatility as we enter the new year, writes Coast Rich. An important driver of volatility will be markets adjusting to less accommodative U.S. monetary conditions. But on top of that, investors will continue to wrestle with several lingering geopolitical issues, particularly with respect to Russia. Lower oil prices, which fell another 6% last week and are now down roughly 45% year to date, are a big part of Russia's problems. According to Coast Rich, plunging oil prices are inflicting real harm on several emerging market countries, notably Venezuela and Russia. So let's get this straight. We have seen volatility go down as low as 10 if you look at June of this year. And we should see some interesting contrary indicators, which I believe are contrary indicators. Some people might say no, they're not. But we could take a look at them right now in this Bloomberg article. And let's just scroll all the way to the top. And it's formerly PIMCO's Bill Gross, wagering on low volatility in new neutral. Bill Gross, manager of the world's biggest bond fund, has been betting that volatility across asset classes will remain very low as gauges of price swings fall to their lowest levels on record. We sell insurance basically against price movements, Gross, chief investment officer of PIMCO. The wager of low volatility by the $2 trillion asset managers part and parcel of its outlook for the next 3 to 5 years in an era it calls the new neutral, Gross said. The outlook is characterized by low interest rates and lower, more stable global growth. Stocks and bonds will only return about 5% and 3% respectively, as any changes in Federal Reserve policy will be taken cautiously. Okay, so let's get this straight. He said that they're selling insurance, and at PIMCO, you should read this quote. That's what we've tried in the last 4 or 5 weeks. So they're selling insurance, or they were selling insurance against price movements. So if you want to look at the volatility in June of this year, this is a 3-year chart at stockcharts.com. If you want to look at it, volatility was extremely low. What was it, like 10.61 at its extreme low? And we see volatility reached a 3-year high this year, hit 30, right, based on this chart. And then if you want to look at volatility in December, where the Dow went to 70,100, I mean, that was a huge move, right, to 25. Now it's back to 14.37, right? I've been trading sometimes long volatility, short volatility. I'm now betting that volatility is going to go higher, right? I probably am a bit too early, but once again, I don't do this for a day job, and I don't recommend, let me rephrase this, I do not recommend anyone doing what I'm doing. First of all, do your own due diligence and homework, and then you could make your own decision on what you want to do. Just want to say that again. But anyways, quite interesting. They were selling insurance towards the bottom of the trading risk range, and yeah, we saw volatility spike to 30. We saw volatility spike to 25-ish. So this is the new neutral that Bill Gross was talking about. And if you want to look at the markets in general, right, there are a lot of individuals that are very, very bullish and are in margin, right? When they are in margin, guess what happens when there's a sell-off, right? You see huge snapbacks to the downside. And that's what we saw in December, and that's what we saw down in September, October as well, when you saw this huge spike up in the VIX and you saw the market go down. But anyways, for 2015, I'm not going to be surprised if we see volatility continue to drift higher, right? You're not going to see, in my opinion, it just being in a steady range, as Bill Gross is saying. I mean, unless they decide to go all out with QE4, then yeah, you may see volatility go below 10. I wouldn't be surprised. But usually when it hits 10, you tend to see the market overbought in those conditions. So that's what I'm thinking about the VIX. I mean, you saw the VIX 3-year low, and then guess what? Huge snapback to the upside. And then you have to remember that everyone is freaking bullish on Wall Street right now. And there are still problems all around the world. If you look at what's going on in China, I mean, last week, what ended up happening, early this week, you saw the 7-year repo rates. It popped up back to 600 basis points, which was where it was earlier this year in January. And we have to remember what happened that time around. You started to see problems in China, you started to see problems in the stock market, this and that. And then you have the situation in Russia, right? You see headlines with the junk bond market could be affected because of oil prices going down, affecting Russia, affecting the fracking companies, which have been pretty much fueled by quantitative easing money. And those were the only jobs, good paying jobs, that were created this time around with this recovery. And now those individuals are getting laid off with these lower oil prices. So what do I see in the year to come? I see volatility, the return of volatility. How you're going to see these huge snapbacks to the downside, and then it's going to go right back up. And because of how the Federal Reserve, in my opinion, is not going to be raising interest rates as of maybe 3-4 months from now, even though a lot of people are saying that they're going to raise rates, the way that I see it right now is if oil prices continue to be lower because of the withdrawal of quantitative easing and also the dollar is getting stronger against these other fiat currencies, in my opinion, they're going to postpone it again. But we shall see what happens. Once again, I am not guaranteeing anything, and these are just my own thoughts as of this moment. And they are obviously subject to change. Anyways, thanks for listening to me, guys. Leave your comments below. Talk to you later. Bye.